All right, gorgeous. Ladies and gentlemen, excited to get started, excited to dive in and talk about some greatness. The goal of this particular webinar and presentation, realistically, is to kind of cohesively collect and gather a lot of traders, a lot of ideas, a lot of sentiments, a lot of plans, and kind of focus them on just one for the month of April. April at Real Life Trading is actually Surprise Yourself Month, which is oftentimes do something you've never done before month. It's really what it's called. And the goal and objective is to trade as a team, is to trade as a unit, is to trade as a collective force. But specifically, my goal is to show, teach, kind of guide, and help traders understand how to build a trading plan and how to follow that trading plan for the preceding days and weeks. That's exactly what we are going to do together for the next few days and weeks here at RLT. This is going to be called the April's Team Trading Challenge. This is going to be a very quick webinar, but my goal is to give you guys the exact plan, the exact strategy. If anybody wants a copy of the slides, let me know. If you would like anything else, let me know. But bottom line, this is only for subscribers. So if you were here and you're watching my voice, you subscribe currently to the live morning or afternoon room, but I figured I would give everyone access to this particular webinar, whoever might want it. Type in a 1 if you guys are all fired up and ready to dive in. There's a bunch of 1s. Here we go. So here's the problem that I'm trying to solve. The struggle of simply not knowing what rules to create. This particular plan is going to give you some rules, very specific, very strict rules. And these are some type of rules that you can build. Again, you can take the plan that we're going to be discussing in this particular presentation, and you're able to expand and expound upon some other rules that you can create in the future, but you're able to really, really nail down and see how you can build a systemized, optimal trading plan and strategy. Also, so a lot of traders have a challenge of choosing a strategy that works. And I can tell you for sure that this strategy, this plan that we're going to be discussing works very well. I've used it many times to pay many, many bills. I've had many coaching students follow this exact plan that I'll be walking you through today. And if you do follow this plan, you absolutely should be making money at the end of the month. If you are not, you're doing something wrong. It's just that simple. You're probably not mitigating your risk appropriately, or you're holding on to your losers or something to that extent. And again, the problem I'm going to try to solve is knowing how to formulate an exact trading plan. Also, my goal is to assist newer traders who are joining Real Life Trading. I realize that this is an extremely unprecedented time in the US stock market right now. Therefore, you're going to have tons of traders who are joining Real Life Trading for the very first time. And I love that. I am super excited about that. It's simply this. In the world of trading, I want us to all kind of just be on the same page, because this market volatility will not stop for the next few weeks and months. And I do know that this particular trading strategy can work very well for volatile markets. And it also gives each and every one of you an idea of what to focus on. I found that a lot of traders just do not know what trades to look at, what trades to focus on, what gaps to focus on. And this is going to help you with that tremendously for the next few weeks. We don't need a ton of fluff in this particular webinar. I think you all understand the objective. There are hundreds of ways to determine the trend. This is the biggest key for day traders, is finding what people are thinking. There's hundreds of ways to do it. Moving averages, different time frames, different types of moving averages, Bollinger Bands, strategies, approaches, so forth. What I'm going to do is outline what works great for me and many of the traders that I work with on a daily basis. Again, especially coaching students. I have presently at least 20 traders who are doing this exact strategy every single month, who are making money every single month. It's not the strategy necessarily, but it's also focusing, because that's the goal. Remember, if we trade as a team, my friends, we're going to lose as a team. We will lose as a team. We will win as a team. Keep that in mind. It's just going to happen. If we have losing days, a lot of traders are going to have losing days, and that's okay. It's very similar, like if you're going to a professional sports avenue, and they all play. And at some point at the end of the game, there's gonna be winners and there's gonna be losers. It's okay to lose. It's all right to lose money, but I will be profitable at the end of April. I can guarantee you it's going to happen. I'm going to will it to happen. And I'm going to do that by following exactly the day trading plan and strategy that we'll be talking about in this presentation. Keep in mind, everything works, just not all the time. So the reason I'm bringing that up is, yes, this strategy works, this approach works, this time frame works, it all works, just not always and forever, just generally. Trading is simple, just difficult, like walking 1,000 miles. Last night, I went for a really nice long run. It was one of the best runs of my entire life. I felt very good about it. And to have ran 1,000 miles last night would have been extremely hard. I am training for a 100-mile run, and I can only imagine a 1,000-mile run. Dave says, I just noticed the candlestick in the RL logo. There we go. Nicely done, man. That's beautiful. Fantastic stuff. Patricia said, you see, I've made it for the first time. I'm so happy that you're here, Patricia. This is exciting. All right, folks, so go ahead and write it down. Here's what I'm going to be doing. And for this strategy, you can use the 2 moving averages, the 105 EMA and the 20 EMA. Why those? Because they work. Here's what you're going to be doing. Very basic strategy. Now, I made one super small tweak to this strategy. For those of you who follow it, you might be wondering. This is going to be the small tweak right here. But overall, if the stock is below the 20 EMA and below the 105 EMA on the 30-minute chart, I'm only playing the stock bearish. That's it. So it has to be below both of them. If it's below both of them, I'm playing it bearish. That's the direction of the trend. If the stock is above, we're playing it bullish. And the small tweak was, normally if the stock is in the middle, I don't trade them at all. But what we're going to do is we're going to practice a little bit, just being able to kind of see a nice wide moving average. If the moving averages are really far apart, so again, we're going to do an example, I promise. But let's say, for example, you have the 20 looks a little bit like this, and the 105 looks something like this. Those are nice far apart, right? You have a lot of trading range in between those. If they're a lot closer together, so let's say the 20 looks like this and the 105 looks like this, right? You're not going to be trading in the middle of those ranges. So you can trade in the middle of it as long as it's nice and far apart on your chart. And we'll kind of look and talk about what that looks like. So determining the trend should be quite simple. This is so that you can come up with a bias. You can determine what it is that you're looking for, and you're going to know every single day when you wake up, you know what 5 stocks we're going to look at. You know what trend you're looking at. You know what direction you're looking for. You already know that. Many traders always ask me how I can look at and determine a trade so quickly, and how I can pull up a chart and not really focus that much on it. It's because I'm looking for a trend that I just know that I'm going to play. Near says, does it work only on the 30-minute or can it work on the 5? We're getting there, Near. We're getting there. The 30-minute is just to help you determine the trend, my friend. All right, so the 30-minute gives you what direction are you doing, and then you're going to go smaller time frames to actually day trade it, because this is a day trading strategy. But this is a 30-minute time frame. You're going to be basing it to determine the trend on the 30-minute chart. So that's the goals. If it's in between the moving averages, you can elect not to trade it or look for bounces off of support. So again, if it's above it on the 30-minute, you're bullish. If it's below it, you're bearish. And if it's in between, you can either not trade it at all, or you can look for bounces off support as a moving average. We're going to talk about that. We're going to do some examples. I'm going to show you. So now what? So this is what Near's question was. So the main time frames to focus on will be the 2-minute chart for the first 30 minutes, 3-minute, 5-minute, and I will start reviewing 15-minute charts after 12 p.m. Eastern. Now, every trader always feels stressed out about this. Feel free to switch back and forth between extended hours, non-extended hours chart. Look at both of them. Just look at both of them, because again, your goal at this point is to get a building block, a foundation, a basis for what it is that you want to do, and get comfortable doing it. Get a good idea and a good understanding of why you're doing what you're doing, when you're doing what you're doing it, where you're doing it, all that kind of good stuff. Robin says for newer traders, EMA is different than SMA. That is correct. Now, why do I choose EMA versus SMA? Just have to pick one. That's really it. That's like saying, do you want Ben and Jerry's or do you want Haagen-Dazs? If you want ice cream, at some point, you got to eat some ice cream. I like ice cream. I like both Ben and Jerry's and Haagen-Dazs, but I'll eat either one, whichever one's convenient. So at some point, you just got to pick, okay? Just got to go this one and then go with it for a little bit. Now, I'll be using the 20 and 105 EMA on all time frames for support and resistance, trailing stops, and so forth. So if I'm using a 3-minute chart, I'm going to have the 20 and the 105 up. If I use a 5-minute chart, I'll have the 20 and the 105 up. If I have the 15, I'll have the 20 and the 105 up. If I have the 30 minutes, I'll have the 20 and 105 on the screen. 20 and 105 is going to be the moving averages we're going to be using for the next few weeks, right, for April. And at the end of April, I don't know what that looks like. Are we going to have like a review webinar? Are we going to do it again for May? Are we going to go update a new plan? I don't know any of that stuff yet. But for right now, let's just figure out the simplicity and the simplistic approach. That's what helps traders make money. You've got to be simple with your trading. You have to be. You can become more complex once you start making money. Type in a 7 if you want to make some money trading. I want to make some money trading. It's got to be simple. If it is simple, you have a better shot at making money. If you don't know what you're doing, you don't know why you're doing it, you don't know where you're doing it, you're just kind of doing whatever, it's going to be a lot harder. I get traders who ask me at least once a day, hey, Jeremy, if we sign up for your morning room or your afternoon room and we just follow your trades blindly, are we going to make money? And it's a very hard question to answer because you're not going to be able to follow me blindly if you have no idea what you're doing. Right? If you don't know how to move your stops, if you don't know how to exit partials, if you don't know how to type in the tickers fast enough, if you don't know how to calculate your shares, if you don't know what type of order to put into the platform, it's going to be a challenge. And let's say, for example, I'm out one day, or I'm on vacation, or I'm not on the webinar, or I'm not posting my trades for the day, or whatever. Then you might not have any idea of what it is that you want to do. Or what if we go on a whole day and I don't take a trade, but you still take one? I mean, it's going to be a very, very challenging event for you to follow me. Even if you think you know what you're doing, it's still hard because you have to know exactly what you're doing and you have to be there, my exact same schedule every single day, which is not easy. It's not easy. The point of the rooms is for us to trade as a community, for us to share ideas, for us to interact with people who are like-minded individuals, people who share the same goals, aspirations, and struggles that we do, people that we can bounce ideas off of, people that we can grow together with, have a giant, amazing family. And again, obviously post some good trades. And if you like the trade yourself, you can take the trade. But what we're going to do for April is we're going to follow the same 5 stocks. At least I will and Brad will. Okay. Now, this is just the morning room. Okay. So the afternoon room is going to be business as usual. I can look at whatever we want. We can analyze all the kind of good stuff, but we're going to be following the same 5 stocks for the rest of April. Myself and Brad and Blake, anytime that he's on the microphone. And Ricky, obviously this is not specifically a requirement for over there in Australia because it's going to be a little bit of a different approach for you. Totally understand that. But again, for those of you who trade the US markets who are here, we're going to be focusing on the same 5 stocks as a team every single day. Type in a 1 if it would be valuable to beneficial to have those stocks right now. All right, so here's the stocks that I'm going to be focusing on. Ready? Here they go. These are the 5. Why these 5? Again, you got to pick them at some point and you got to stick with them. If you're going to go to a restaurant, you got to sit down at the restaurant, you got to order some food, and you got to eat that food. Now, all of these have weekly options. So this one has weekly options, this one, this one, this one, and this one. They all have weekly options. They all have a very nice average true range. They all have really good movement. They're not massively expensive. So Square's not that expensive. AMD's not that expensive. Roku's not that expensive. Tesla's obviously the most expensive on the list. Baba's not insanely expensive. And they work. They work very well. Okay? They work very, very well. And again, they all have weekly options. Thursday and Friday are my favorite days to trade with these 5 companies. So here's the rules for the strategy. And again, you're welcome to print this out. You're welcome to write these down. I will give you a copy of these slides if you need them, which a lot of you probably want them. Dave says, are you going to trade both options and stock? Yes, I will. I'll be mostly trading stock though, Dave. Generally, But you can definitely trade options with any of these. I do trade options. I will be trading some options. So yeah. All right. So here we go. If the stock gaps above the previous high of the day, I'm allowed to play the stock in the first 15 minutes. If the stock gaps below the previous low of the day, I'm allowed to play the stock in the first 15 minutes. Simple as that, right? So if it does not gap above the high or the low of the day, guess how long I have to wait to trade? Any guesses? Can anyone read between the lines? It's actually rule number 3. All right. So if the stock does gap up, but does not above the previous high, the previous low, I have to wait 20 to 30 minutes to take a trade. Can I go in and measure that? The answer is absolutely. I can go back in time and measure that very easily. If the stock does not gap above or below the high of the day, or again, right at it. So for my engineers, it doesn't have to be the exact penny. Sometimes it can be like a penny and like 2-3 seconds into the market open, it's already above the high. So there's going to be a little bit of wiggle room with just precisely how it's opening, right? So if it opens 3 pennies under the low of the day, but 8 seconds into the market is past the low of the day, then I can still trade it. But generally, I'm going to be waiting 20 to 30 minutes. If the stock does not gap at all and open flat, I can only play it after 30 minutes of market open. And again, always focus on the main direction of the trend. If it's sideways, do your best to buy low, sell high. So again, if it's straight up bullish, if it's straight up bearish, great. And if it's in between the moving averages, look to create your support and resistance and just buy low, sell high. Now, here's some rules for the broader market. If SPY is gapping more than 3%, which is going to be happening tons and tons and tons for the next few months probably, be very cautious taking a breakout. Right? So when we're talking about a breakout, I mean something like this. Like if you're getting in and you're getting in down here, that's a breakout. This is a breakout. You're going to look to play in here as often as you can if you're taking something bearish. Joel says no wild card stocks. Nope, 5 every day, all month. Now, when you get like some type of trade like this, again, your goal is to not get in up here. Okay, if the SPY is breaking out more than 3%, you absolutely want to get it as low as you can, which normally relies and repeats on the broad, and just general trading. But what's also really important to understand is this one right here, rule number 9. If SPY does not gap past a pivot, which was actually Friday. So this was Friday for me. If SPY does not gap past the pivot, which is the high or the low of the previous day, only 2 trades max can be taken that day. Be more aggressive, aka quicker, taking gains on inside day ranges. So if it's an inside candle, we can take 2 trades that day until it becomes not an inside candle. But if it's gapping inside of the previous day on SPY, which I think is happening today actually, and we'll talk about that in the morning room, right? The morning room starts on time as normal in 40 minutes. If we go on Friday or whatever day, but like the past Friday, SPY was an inside candle and we did play Roku. Roku was a nice gap. We played it in the first, with a 2-minute chart in the first few minutes of the day. We could have been more aggressive, aka quicker on taking our gains. And Friday could have actually been a really, really nice day if I had sold Roku just a little bit earlier. Just a little bit earlier, if I'd have gotten out, that would have been a really nice day rather than a losing day, but that's okay. I was kind of helping you guys for the beginning part of this plan. So here's an example of a nice wide moving average. So do you guys see how far these moving averages are apart from each other right here? So when you have a nice wide moving average, for example, when this white candle gaps up, this is the 30-minute chart. When the white candle gaps up, that's going to be a really nice retest gap. You can see that you're in between the moving averages. So they're nice and wide. Stock trades down to the average. You're allowed to look to buy it off of that support. And where you try to sell it, your goal is to try to sell it up here. Now, obviously, it didn't make it that high on the day trade. So you would have sold somewhere over here. And that's okay. But your objective, since the moving averages are nice and wide, you would have began to play something. Once they start getting into here, right as they start kind of jumbling up and getting a little bit more sideways, especially over here, you're waiting. You're doing a lot of waiting on this particular trade. So when it's nice and wide, you can play in between the moving averages if you want to. if you have a good feel for what it's going to do. And then when it's out of the moving averages, you're going to be a little bit more patient with that particular trade. Now, for something like this is a very nice, gorgeous trend. Okay, you can see nice and wide moving averages, right? Nice and wide, nice and wide. You got a really good gap right here, but again, it was inside the moving averages. So you'd have looked for it to trade down here. You'd have looked for maybe some type of bounce, but it ended up breaking lower. Okay, comes back up into the averages, ends up breaking lower. You got this really, really nice gap down here. Trade up into the average and rolled over. This is when we would have most likely been playing it bearish. It would have been right up in here. We would have zoomed into a smaller time frame and tried to catch that move. Again, the 30-minute chart is an idea. It's a perspective. It's a location. It's a time frame. It's a trend. It gives you your points of references for where you're going to be doing what you're going to be doing and where you're going to be doing it at. So again, just to reiterate, these are the 5 stocks. If the stock gaps above the previous high of the day, I'm allowed to play it in the first 15 minutes on a 2-minute chart. So I will wait for a bearish candle on the 2-minute chart, preferably a bearish high wave or a bearish hammer, and take the break above that to go long. So I'm waiting for a nice bearish candle if I get that gap above the previous high of the day. And then, of course, the next rule, same thing, but for the low of the day. So this was exactly how I played Roku on Friday. And it really could have worked quite well. I just didn't play it quite aggressive enough. That's all. And that's all right. Lesson learned, right? You learn some lessons through losses. My lesson is going to be a little bit more aggressive on inside day pivots, on spot, when the SPY is a broader market inside day gap, and really look for those nice, good areas to take your gains quickly. All right, beautiful. So I think you guys got that. Pretty basic, pretty simple. So let's go ahead and kind of review this a little bit. And let's go talk about Friday and talk about some examples. And then we're going to come back to the chart. So really quickly, we can pop over here to SPY and talk through how she's gapping at this present moment in time. So here's the daily chart. And right now, SPY is gapping. Is it opening flat, or is it opening up, or is it opening down? How would you guys classify this? Is it opening flat? Is it opening down? Is it opening up? How are we playing it? What do you all think? Okay, so everyone's saying flat. That is correct. So it is opening flat. It's opening literally 28 cents, which is nothing. So you're opening perfectly flat. So that means so far it is an inside day candle, right? So far. Now, if we take out the low or we take out the high, which either one of those is possible in this particular market, then we can figure out how we're going to do it. But as we look through these these stocks, right, the stocks that we're going to be looking through trading, all we have to do is come over to Roku, and this is a very, very quick, easy thing. We don't even have to look at the trend yet. We don't even have to look at the 30-minute chart yet. All we have to do is going, all right, are we gapping above the high of the day or the low of the day? And the answer is neither. So the high, we're not gapping above the high, and we're not gapping below the low. We're opening flat. So on Roku, I'm going to have to wait at least 30 minutes as of right now to take this trade. Now, the market opens in an hour. A lot can change in an hour. But for right now, Roku's opening flat. Tesla opening down very small, so it's not gapping above or below the low of the day. See how easy this is? Right, really, really simple. So this is Tesla. Tesla's not gapping above or below the low of the day. Very, very easy to tell, very easy to spot. Okay, AMD right now is gapping up. But again, presently, it's not gapping up above the high or low of the day. It is gapping. It is gapping. It's gapping almost 1%. So that means that AMD could probably be played in the first 20 or 30 minutes. And we would look for, if we go into the 30-minute chart really quick, so we're actually getting an okay gap on AMD. So if this is the 30-minute, the red line is the 20 EMA, and then you have the 105 EMA. What direction would we be playing AMD today? Angela said, do you use the wick? Of course, you have to. That's how you determine if it's the high or the low of the day. Yep, the wick of the candle determines the high and the low of the day. So that's how you know if it's gapping up or down. So this will be the right here. This is this upper shadow is the wick. That's the high on AMD. So if we were gapping above that, right? We're at 47.05. That's the high of where we're currently trading. And the high of the day on Friday on AMD was 47.88. So we're not gapping above there yet. We are gapping up, and therefore we would look to play AMD bullish because the trend right now on AMD is bullish. So we'd be looking at playing it bullish, and it is gapping up, but we'd have to wait right now because it is not gapping above the high of the day. Jason said that was the 25th for the high of the day. Right. I apologize, Jason. You're 100% correct, my friend. This is the high of the day. These two candles for Friday right there. OJ says ABT looks good. Yeah, it does, but I'm not looking at it. Only looking at these stocks. All right. Next on the list is Square. So let's go look at Square. So here's the daily chart and Square. Is it gapping above or below the low of the day right now? The answer is neither, right? So the low of the day of yesterday is 51.48. Right now it's at 53.21. 53.21 is opening pretty flat. And then here's BABA, and BABA is opening perfectly flat. So as of right now, with an hour to go before market opens, it seems like it's going to be a day where we're going to be doing a lot of waiting. Most likely, AMD is going to be the top of the list because it's gapping the most out of any of the stocks we're looking at. So it's gapping 1.1%. Roku is gapping, well, now Roku is gapping 1.2%. Tesla's gapping 0.1. Square is gapping 0.5. BABA is flat, and SPY is 0.2. So AMD and Roku both gapping up would be the two trades that we'd be looking at the most, and they're gapping the most, but neither one of them are gapping above the high of the day as of right now. Now, if we go into Roku on a 30-minute chart, okay, this is the 30-minute chart on Roku. Are we in between the moving averages as of right now, yes or no? The answer is yep, we're in between the moving averages. So right now we are in between them. If we start getting up here, would we be above the moving averages? The answer is yes. Therefore, we'd be looking at playing Roku what direction? Bullish. Nice. You guys got to get the idea? That's pretty much it. That's really the whole strategy. It's simple, but it works. And again, for most traders, the challenging, complicating thing is on a day like today, which might be boring for a select group of 5 stocks, they're still going to go look for 47 other trades, and they're still going to go take another trade randomly that's not part of their plan. And they're not going to, they can win or lose. It doesn't matter. But this is how a trader can follow a rule-based system. You have a select group of stocks that you follow for a period of time to give yourself the mark of a disciplined trader. And you can go, all right, I feel like I'm good. I feel like I'm disciplined. I feel like I'm ready. I know I can trade this strategy. Now let me go apply it to a bunch of different stocks. That's fine. It's absolutely fine. Christopher says, what determines if you use options or stock? Is it preference? It is absolutely personal preference, Christopher. Also, it is experience level. So it's going to be that as well. So if you don't have any experience trading options, trade stock. If you haven't day traded stock profitably, trade stock. Don't trade options. Options are not going to help you make more money. Would you agree, Ricky? They are much more complicated. They are much faster. There's so many more paradigms with options. They are incredible instruments. I hate options and I love options. But if you have not day traded stock profitably, you should not start day trading options. Just because it is cheaper and less expensive does not make it easier. Pierre says, do you wait for confirmation to get in? No, confirmation does not exist. I'm simply waiting for a gap above or below and playing the candle pattern, playing the support resistance, playing the breakouts above bearish candles. Confirmation does not exist. Confirmation is simply what is the trend, right? So like over here, trend is bullish, you play it bullish. So if we go back to the slide deck, Pierre, so let me go back to the slide deck really quick, because Pierre is wanting to know what the confirmation looks like. So again, Pierre, this is what I'm keeping my eyes on, 1B and 2B. If I'm playing it on the 2-minute chart, I want a bearish candle on the 2-minute chart, preferably a bearish high wave or bearish hammer. And if I'm playing it bullish, preferably I want a bullish high wave or a bullish hammer to go short below that candle. So I'm just looking for candles of the opposition, the opposing color. That means that traders are trying to take the opposite direction of the trade. Therefore, I can take the opposite direction of the trade and play with the trapped traders. Okay? So here's April's trading plan. I want you to write your risk down. Everyone should know what that is. Mine's going to be $1,000 per trade. Max loss, 2R per day. For me as well, for all of April. Generally for me, it's around 3 or 4 per day. It just kind of depends on the day. Depends on how volatile it is. But for April, for right now, I will only lose 2 Rs per day in day trades. All right, so 2R loss per day. That's going to be my absolute max. No trades before 9:32, right? Because in no strategy did I mention playing the open. You have to wait for at least a 2-minute candle. So that's going to be very easy. All right, again, rule number 2 is self-explanatory. Rule number 3, pretty self-explanatory. Plan and review for a gap below the previous low or above the previous high. Those are a lot better. So in the morning room, when we log in, when we take from this webinar, we're going to go right into the morning room. So I'm just going to shut this down, get the recording started, get that uploaded for anyone who might have missed it. But the good news is most of you are actually here. There's tons and tons of you that are here right now. But bottom line, that's what we're going to do every day. This is exactly what Brad's going to do every day. This is what we're going to look at, and it's going to be really, really simple. This is what's going to be on our watch list. It's not going to be that challenging. It's going to help a lot of my newer traders who are not only newer to real life trading, but just newer to day trading in general. This will help you for sure. So again, Pierre, I love black hammer candles or black high wave candles on 2 or 5-minute charts after a gap up. Same thing for a gap down. This is my go-to. Now, for some of you, this is going to be a very hard rule to follow. For me, it's going to be pretty easy. Take a max of 60 day trades in April. It's going to come out to about 2.7 trades a day, give or take. However, I will personally be on vacation for 3 days in April. So that's why I wanted to do Mentorship Monday today. I won't be taking that many trades in April, but I will be taking 60. So whatever my max is, you can almost rest assured that I'm pretty much going to hit my max. So towards the last few days of the week or the month, I'll be pretty close to that 50 mark. Because I love trading, and there's nothing wrong with trading, but 60 trades max. Okay, rule number 7, if you exit one trade in the first 30 minutes of the day for less than 0.7 hours, be done for the day. Very specific, concise rule. Robert says, is it just these 5 stocks? That is correct. John says, where would this video be available to rewatch? It's going to be on Slack and in your email, John. Dave says, why so long? My vacation? I don't know, man. I just keep getting told that I'm supposed to take one. That's what people keep telling me. So I figured, you know what? I'll take a day off. All right, so that's rule number 7. Very basic, very simple rule. If the net result of 2 trades is 0.7 hours or less, be done for the day. And then here's a good one. Once the trade is filled, do not move the stop for 20 minutes. So any questions about these rules? These rules should be relatively basic, relatively simple to follow, pretty streamlined. Jason says, don't you need to be done after 2 trades anyway? No, I can take more if I win nicely on 2 trades. Remember, I can take 60 trades in a day. Or sorry, I wish. 60 trades for the month of April. So if we take 4 trades one day, we got 56 left. And by the way, today is March 30th that I'm recording this. So April has not started yet. Keep that in mind. So I will be using these rules. I will be implementing these rules starting today, but for the next 2 days, this is kind of like your experiment level. If you want to practice it, if you want to day trade it, if you want to paper trade it, whatever you want to do, if you want to ask questions, today and tomorrow are going to be great great days to ask all of your questions and get everything in your trade logs. But I will be using this strategy live, real money today, watching, waiting. My April starts today for me, except for this rule. Except for these two rules. Anna says, what is a black high wave candle? Looks just like this, Anna. Just like that. A little bit of an upper shadow, a little bit of a lower shadow, almost the same size, a little black body. That's it. Asim says R stands for risk. That is correct. Yep. Risk unit. What is your risk unit going to be? Near says, why those 5? I talked about that earlier. Albert says, number 7, are cases when you are up less than 0.7 correct? Are the cases when you are up but less than 0.7? Yeah, that's correct. So if you take a trade and you win less than 0.7, you're done for the day. Bill says your 60 trades is 1 round trip. Correct. 1 entire round trip. Great question. Great clarification question, but 1 full trade. So entry and exit. You can have as many exits as you want. That doesn't count as your trade. I want everyone to be clear on that. So if you enter, let's say you enter 500 shares and you sell 200, 200, and 100, that counts as 1 trade. You guys all follow me? So 60 individual setups. Lita says, does it allow paper trading of other stocks if you're trading real money? You can paper trade whatever you want anytime. Yep. So again, this is just a day trading strategy for April. If you're swing trading, you want to trade another strategy, you can paper trade whatever you want. That is entirely up to you. Paper trading is a great place to learn and experiment and grow, but it does not pay bills. So it's going to be entirely kind of up to you about what you're paper trading, how often you paper trade. But if you want to paper trade this, you're more than welcome to. You can paper trade it on any other stocks. You can find your own companies that you like. Again, this is not a mandatory requirement. I would never make anything 100% mandatory for everyone in attendance. Simply saying that this is how a trading strategy and a day trading plan is built. You have some stocks, you have some rules, you have some requirements, you have some very, very specific quantitative measurable rules that you can follow, and then you follow them. Albert says for re-entry, same setup, but I enter again, same direction, same size. Does it count as an additional trade? Yes, it does. Chris says, are we allowed to hold these trades overnight? No, you're not. They are day trades. Angela, this is a very good plan. Thank you, Jeremy. My pleasure. Vincent says, for the newer folks, please define high wave candle. How about we just go show you some high wave candles? Okay, so this right here is a high wave candle. There you go, ladies and gentlemen. That is a high wave candle. Big upper shadow, big lower shadow. That's on a 30-minute chart. Let's go to a 3-minute chart and look at some high wave candles on a 3-minute chart. Okay, so this is a 3-minute chart on Roku. This is the exact trade that we played on Friday. Would you all classify this right here to be a high wave candle? Julio says, afternoon trading members have to join the day trading room. Nope, they do not. So again, you have this plan. You can use it on your own. If you're not in the morning trading room, that's totally, absolutely fine. Some of you here are only in the afternoon room, and that's all right. No big deal. Some of you don't day trade, and that's not a problem at all. But again, this is a plan that you can certainly use. And yes, this is a high wave candle, right? Big upper shadow, big lower shadow. They're about the same size and a nice candle body. Is this a high wave candle right here? The answer is yes. Yes, it is. Is this a high wave candle right here? No. All right, beautiful. So I think you guys pretty much got it. I mean, high wave candles, you can also Google them. They're Googleable. High wave candles. Check it out. Look at this. You can Google stuff, ladies and gentlemen. It's crazy. Look at this. It's all in Google. I did not make this stuff up. I wish I did, but I wasn't born in the 70s. All right, so high wave candles, they are Googleable. I don't know if that's a term. Type in a 1 if you did not know that. It's okay if you didn't know it. I expect some 1s. But just letting you know, you can Google pretty much anything. If you don't know what something is, it's probably in Google. Dave says, what's the definition of a high wave candle? This is it right here. This is the definition. That is it. Massive indecision. No one knows what's going to happen. Pablo says, what's the difference between a doji? This is a doji right here. This is a high wave candle. Are you able to see the difference, Pablo? Pablo says, yes. There you go, my friend. There's the difference. So again, these are massive indecision. Pablo says, but what does it mean? What does it mean? Let's figure out how I can talk through this. So this particular candle right here, this is a high wave candle. Stock opens here, trades all the way up, trades all the way down, and then gets a little bit of a candle body close. At the end of this candle, no real change happened. No real movement happened. It's just a lot of indecision. So you have buyers and sellers that are battling it out. No real clear winner. It's ready for a pop and ready for a nice break in some direction. Donna says, can you show some examples of entry points, please? Sure. So let's go look at 2 or 3 trades. So this was Roku. And again, Roku we took on Friday. So this one did gap down. It took out the low of the previous day on Roku. Here is your hammer candle on the 2-minute chart right there. That was a hammer type of candle. So our initial entry was below that candle with a stop above here. And what I should have done is once this candle came in, this nice little strong bullish candle, I actually should have increased my entry to put my entry below the low of all of that buying volume and then put my stop right here. Would have just triggered me in a little bit earlier. Let's go look at another one on AMD. So here's AMD. And this one, AMD, if we go to the 30-minute chart, this was actually a bullish trade on AMD. Why? Oh, I was like, why is that looking like that? So this is AMD on Friday. And when it gapped down, you'll notice were we in a bullish trend? Yes or no on AMD? So we can go back to here. So we go back to here. Were we in a bullish trend? Yes or no? The answer is yep. We were definitely in a bullish trend. So it looks nice. It's like, okay, so we're looking at playing it bullish. So we did have a gap down on AMD. So it gapped down on AMD. This is the 2-minute chart on Friday. So here's the 2-minute chart. And would you classify this trade as a bearish hammer, ladies and gentlemen? Yes or no? And the answer would be correct. So Donna, where would your entry be if this was a bullish trade? It's in a bullish trend. You had a small gap down and you have a bearish hammer candle. Where would your entry and stop be on this trade? Entry would be here. Stop loss would be right there. That's it. That would have been the setup. And really, that's what we're going to be looking for a lot. We're going to be looking for those types of candles. Here's Square not too long ago. So this was a brilliant, brilliant gap on Square. I'm just going to go show you what the daily chart looks like really quick. I'm going to show you what the daily chart looks like. We're going to go into the 30-minute. But this was Tuesday of last week, I believe. Tuesday or Wednesday. Wednesday. So this particular gap right here, ladies and gentlemen, was it gapping above the previous high of the day, yes or no? Was it opening above the previous high of the day, yes or no? The answer is yes to both of those questions. It was gapping above the previous high of the day. This is the high of the day right here, and it was gapping above there. So if it was gapping above the previous high of the day or low of the day, we can be a little bit more aggressive, right? So yep, we can be a little bit more aggressive on that trade. So if we're doing that, we can play it on a 2-minute chart, correct? The answer is yes. So if we go into a 2-minute chart, we go back to March 25th. This was a brilliant, brilliant setup. I did try to take this trade. I just got skipped, and that's okay. All right. So you have a bearish candle. So initially, my setup was entry here. Let me try to go back to the very first candle. All right, so here's the very first candle. Does everyone know how to trade that candle? Right, 2-minute gap. Pablo, Donna, Near, everyone comfortable in this candle? Right, big upper shadow, entry here, stop loss there. Now, when this candle comes in, you have two choices. You can either keep the exact trade setup. It's up to you. Because it did break below the stop loss, but it only threw in a little bit of a lower shadow. So you can keep the exact trade setup. You don't have to move anything. You don't have to do anything. This particular trade and particular strategy, one of the rules is once you set up the trade, you can't do anything for 12 minutes. Right? Like if you put the trade into the broker, you can't do anything for 12 minutes. This is one of those situations that we're going to kind of get a general idea and we're going to start practicing with over time. But this can be one of those plays where if you set the trade up and it's in, right, you just have to let it do its thing for 12 whole minutes. Dave says that stopped out. No, sir, it did not, because it did not trigger yet. Right, Dave? So the trigger would have been this particular price, would have been above the high of that candle. Does that make sense, Dave? So until it goes above here, the order is not going to go live. It will not trigger in. Now, in this particular situation, this particular trade setup, I did adjust my entry. I put my entry here, and I put my stop a little bit lower, and that caused me to get skipped on the trade, which is unfortunate. But if I had left the trade open, I actually would have gotten filled. And there would have been the fill right there. And look at this beautiful, beautiful move. Pulls all the way back. All right, so let me just kind of, delete these really quick. So when you have this type of move, this was a really, really good move for the day. But again, if you're playing something like this, it is a retest gap. Remember, so you're still able to use what type of gap it is to your advantage. You're still able to use that. So if you have a nice run up like this and you're up an R and some change, this stock moved from 50 to 55, not to mention the gap, right? Don't even focus in the gap. It went from 50 to 55 in like 8 minutes. Is that a big move? Yes or no? Okay. I'm not great at math, but that's 10%. And that's not even factoring in the gap. Plus it's a retest gap. So what should you be doing up here? You should be selling, locking in your profit, right? Letting it retest. And after the retest comes in, you can play something a little bit more aggressively, which actually would have worked out extremely well also. This is one that did end up playing out really, really well for a retest move also. And that's the one that Jason played. So Jason played the retest of this move in here and played it bullish, which was a really, really nice trade. Mason said, should we always be looking to play for 2R if it's above or below the averages? No. That is your goal. But again, just like I mentioned in this particular exact precise example of this moment in time, Mason, that trade would have not have hit 2Rs. So you'd have had to have exited a little bit higher. Pierre said, what would your entry be on a retest? Somewhere over here. After it makes its new high and has a pullback. So specifically, once these candles come in, Pierre, right, you have the retest, you make a new high, you go, okay, cool. You start to look for that bounce of the S-curve. Somewhere in here, you would have gotten filled. So either entry here, pullback here, somewhere in this general vicinity with the stop loss down here. So Mason, yeah, great question. But yeah, you're not going to always be for 2R. Sometimes you're just going to be looking at how large the stock has already moved. How big is the move? What type of gap is it? Your general wins, ladies and gentlemen, are going to be somewhere between 1.2 and 1.6 Rs. These are going to be your very basic, broader, middle of the road type of wins. This is where your bread and butter should be made. Because if you can make 1.2 to 1.6 and you can lose 0.7 to 0.5 Rs per trade, this is just math. The spread, the difference between these two numbers is your take-home pay. And again, that can be quite significant. It's just all about not losing a lot. Now, when would I have waited for a 2R trade? Well, so if I had gotten into this trade here and I got some black candles, I got some resting candles, it traded sideways for a little bit longer, I'm willing to hold for more because the pressure is building. If I get into a trade and it just rips in my face and I'm up and the stock is up 20% in like 9 minutes of the market being trading, then I'm going to take my profit, lock in my gain, and kind of be done. If I can get a really good risk reward ratio, so like kind of Pierre was saying on the retest, if I can enter here at this resistance with a stop loss here at this level, I would have the ability to play for 2 hours before the high of the day. And it didn't end up making that high of the day level. So risk reward oftentimes is based on entry. And that's what I tried to do. When I tried to enter here with a stop loss there, that would have been a 2R trade. Now, the ironic part is if I had just left that order open for a long period of time, so here's the order, right? If I had left that exact same order open, it would have eventually worked for another 2 hours. I would have had to leave it open for 30 minutes almost. Yep, great questions, great stuff, team. We're doing well. We're doing very well. So those are some of the rules. And again, once you set up a trade, you cannot change or update the trade at all for 12 minutes. So that's going to be one of my hardest rules going forward, but that's what I'm going to be doing. So once the order is in the broker, I can't do anything for 12 minutes. Right, Mason? Plan to exit all at 2R. If it hasn't been hit or 20 minutes, exit if profitable or move target farther. So that's going to be your mark. After 2 hours, if you haven't hit 2 hours, it's not going to happen. And if I'm able to exit early, Mason, take partials or be aggressive. Look at weekly moving averages to find possible supports. If I break any of my rules above, I'm going to shave my head bald. And if I end April profitable, I'm going to go to get a nice high-end massage because all of my massage places have been closed for like the past few weeks. And, because of the virus and all that stuff. So I haven't had a nice massage in a long time. I'm like, man, that's going to be my thing. So that's what I'm going to be doing. I'm going to try to find a nice massage at the end of April if all goes well and if I'm able to. Vincent says, I wish I had the guts to shave my head. Do it. Don't be scared. Don't break your rules. It's very easy. I had a guy who grew out his hair for 18 years and he had to shave his head because he broke his rules. True story. Joel said, and it's extra harsh for the ladies. That's correct. Yeah, but again, you're welcome to come up with your own for this, right? It's very simple. Just don't break your plan. It's real easy. Real easy. All right. Now, Albert says, what do you mean by exit early? Exit whenever you're profitable, whenever you want to, for whatever reason, Albert. That's pretty much the answer. Yeah. So exiting early is you get into a trade, you're profitable, and you feel like exiting, exit. Take your profit, be done. And then don't lose more than that on your following trades. So this is going to be kind of like an outline of my daily schedule going forward. I don't know specifically why I built this into the plan, but I feel like some of you might want to know what my daily schedule looks like. So I figured I would just kind of throw this in here. This is subject to change, right? Everything is not an absolute rock solid requirement. I have activities that can be shifted to meet other priorities and they're going to be highlighted in red. If it's not highlighted in red, I more or less do it pretty much every single day. Now, this is going to be starting April 1st, which is going to be Wednesday. You're welcome to copy this plan, copy this strategy, and copy this time frame and kind of input your own, whatever it is that you like. But this is kind of how I segment my day. I segment my days in about 20 to 35 minute increments, generally. So if I'm going to go somewhere, I know what time I'm going to be there within minutes. If I do anything, I'm going to be there in minutes. Mark says, I'd love to see your 10-minute workout plans. It's easy, man. Bunch of push-ups, bunch of squats, some burpees, and you're done. Burpees, squats, and push-ups, man. Not hard. Well, it is hard. It's terrible, actually. So 6:30 wake up, 6:45, 6:40, 6:50, do a little bit of journaling. Just write down what you want to accomplish that day. John says, what's your time zone? I'm in Central, right? Time's in Central right there. It's up to you what time frame you live on. You guys know what time frame you guys live on. Do the math, right? So whatever you live in, this is Central for me. I write down the journal, who deserves my love for today and who should I pour in today? Ask that question every day, guys. It's a great question. Great question. Who should you spend your time with? Who should you devote your time with? Who should you really pour into that day? I shower 10 minutes always, never more than that. Eat breakfast. So generally I have a smoothie bowl or leftovers. It's pretty basic. I don't really do the whole breakfast. I don't care. I just eat. So it's normally a smoothie bowl or just whatever's left over. And then from between 7:40 and 7:55, I reply to emails, text messages, and social media on my phone. 8 to 10, I do some trading, obviously, focus on the plan and the process, not the money. 10 to 10:45, I go for a run, which is usually somewhere between 3 and 6 miles, just kind of depending. But again, I can flex that if I need to. 10:45 to 11, snack, relax, reviewing trades, OCOs. And then the morning room starts at 11 for me. And then 12 o'clock on Wednesday, I have an interview, so I'll start taking notes. I'll do an interview every day at 12 on Wednesdays. 1 o'clock, I message coaching students. I'll check in on them. 1:15, I start reading. 1:45, I check on trades. 2 o'clock, I have lunch. 3 o'clock, again, I start working on stock reviews for about an hour. But again, I can flex that if it's a Tuesday or Thursday. I don't have stock reviews on Tuesdays and Thursdays. 4 is the afternoon room. 5, make sure the afternoon room is uploaded. Check on social media, make your everything looks good. 5:30 to 6:15 is downtime. Sometimes I'll take a nap. Sometimes I read a book. Sometimes I'll do whatever, right? 7:30, I have dinner. 8:15, I shower. 8:30, I meditate on the day, review the next plan of attack. 8:45, watch a movie, read, or phone calls with loved ones. And then 10's bedtime. That's pretty much it. So some of these things I can flex, right? So downtime sometimes is back trading. Sometimes it's some futures trading. Sometimes it's email. Sometimes it's something else. But this is how I have a very, very productive day. Generally, I'll get more done in a weekend than most people get done in an entire month. And it's all because I just schedule things in 20-minute increments. So every 15 to 20 minutes, I'm doing something else, which reminds me, we have the morning room starting in 60 seconds. So thank you so much, folks. I'll email you this presentation later. You guys absolutely rock. Let's go crush it in the morning room. And until next time, love, life, live life, trade it. Bye.